You trained for the career. Now build the business. This is the Muse Spring Minute, where aspiring tax professionals learn to launch and scale their own practice. Here's your host, Jason Carr.
If you want a smoother first tax season, build your workflow before the client documents start arriving. Today, I want to walk through the basic system every new tax preparer should have in place before January: intake, document collection, review, preparation, delivery, and follow-up. A tax preparation business becomes stressful when every client feels like a brand new project. One client emails documents, another texts screenshots, another drops off a folder, another sends half the information now and half 3 weeks later. One person asks for updates every 2 days, another disappears after you ask one follow-up question. That is how tax season gets messy. The solution is a workflow. A workflow is simply the repeatable path every client follows from first contact to completed return. It does not have to be complicated. In your first year, a simple workflow is usually better than a sophisticated one that you do not use consistently. The first step is inquiry. This is the point where someone reaches out and says, "Can you help me with my taxes?" You need a standard way to respond. That response should do 3 things. First, thank them for reaching out. Second, explain the next step. And third, move them into your process. For example, you might say, "Thanks for reaching out. The next step is to complete my new client intake form so I can understand what type of return you need and whether I'm the right fit." That sentence protects your time. It also signals that you operate like a professional. The second step is intake. Your intake form should collect basic information before you quote, schedule, or accept the engagement. At a minimum, you want the client's name, contact information, filing status, prior year filing status if known, state of residence, income sources, dependents, business or rental activity, investment activity, foreign accounts, IRS notices, and whether they filed last year. You're not preparing the return at intake. You're screening the client and identifying complexity. A W-2 employee with one state, no dependents, and no side income is very different from a client with self-employment income, multiple states, crypto transactions, rental property, and an IRS notice. Your workflow should help identify that difference early. The third step is engagement. Before you begin work, the client should understand the scope, the fee, the timeline, and their responsibilities. This is where your engagement letter matters. The engagement letter should explain what you're doing, what you're not doing, what information the client must provide, how fees work, what happens if information is incomplete, and how communication will be handled. New preparers sometimes treat engagement letters like paperwork. I want you to think of them as workflow tools. A good engagement letter reduces confusion. It gives you something to point back to when a client sends documents late, asks for services outside the original scope, or assumes you're responsible for things you never agreed to do. The fourth step is document collection. This is where many new preparers lose control. If you let every client send documents however they want, you will spend tax season searching through emails, downloads, text messages, and random attachments. That's a bad use of your time. Pick one primary method for document collection. That might be your tax software portal. It might be a secure document platform. It might be an in-person drop-off process if you're running a local practice. Whatever you choose, make it clear. You can say, for security and organization, all tax documents need to be uploaded through the client portal. Then create a standard document checklist. For most individual clients, the checklist might include W-2s, 1099s, mortgage interest statements, student loan interest statements, child care information, charitable giving records, health insurance forms if applicable, prior year tax return, and identity documents. For self-employed clients, you need more: business income, expenses by category, mileage, home office information, business assets, subcontractor payments, and any 1099s received. The fifth step is to review before preparation. Do not start preparing the return the second the documents arrive. First, review whether the file is complete. If something is missing, ask for it before you begin. If you prepare around missing information, you create rework. Rework is one of the fastest ways to lose money in tax prep. Create a simple status system. For example, waiting on intake, waiting on engagement letter, waiting on documents, in review, in preparation, client questions pending, ready for signature, filed, complete. That status system can live in practice management software, a spreadsheet, or a project board. The tool matters less than the habit. The sixth step is preparation. When you prepare the return, follow the same internal sequence each time. Input taxpayer information, confirm dependents, enter income, enter adjustments, enter deductions, enter credits, review state issues, review refund or balance due, compare against the prior year if available. That last step is especially useful. A prior year comparison can help you catch obvious issues. If the refund changed dramatically, income dropped, credits disappeared, or withholding looks unusual, pause and ask why. You're training yourself to think, not just type. The seventh step is quality control. Even as a solo preparer, you need a review step. Before presenting the return to the client, review names, social security numbers, bank information, filing status, dependents, income entries, withholding, direct deposit details, and any large changes from the prior year. Most first season mistakes are not advanced tax law mistakes. They're process mistakes. Wrong bank account, missing form, incorrect dependent, document uploaded but never entered, client question left unresolved. A quality control step reduces those errors. The eighth step is delivery and signature. Do not simply send the return and say, "Here you go." Explain what the client is looking at. Tell them whether they have a refund or balance due. Tell them what needs to be signed. Tell them what happens after signature. Tell them how long e-file acceptance usually takes in your process. The ninth step is closeout. After the return is filed, send a completion message. That message should confirm the return was filed, remind the client to save a copy, explain any payment deadline if they owe, and tell them when they should reach out if they receive a notice. This is also where you plant the seed for next year. A simple line works. I recommend creating a 2026 tax folder now so next year's documents are easy to organize. I recommend creating a 2026 tax folder now so next year's documents are easier to organize. That's client education, retention, and future workflow all in one sentence. Inside MuseSpring, this is the kind of business infrastructure we focus on because tax preparation is more than knowing forms. The Tax Business Blueprint program is built around learning the work and building the practice around that work. When you have a workflow, you're easier to trust, easier to refer, and easier to scale. So before January, write down your workflow: inquiry, intake, engagement, document collection, completeness review, preparation, quality control, signature, filing, and closeout. That's the path. Your client should not have to guess what happens next. You should not have to reinvent the process every time someone hires you. I'm Jason Carr. Thanks for listening to the MuseSpring Minute.
Thanks for listening to the MuseSpring Minute. Subscribe and leave a review so other future tax pros can find the show. The MuseSpring Minute is produced by MuseSpring LLC for educational and informational purposes only and does not constitute legal or tax advice. For guidance specific to your situation, consult a qualified professional. MuseSpring LLC is not a law firm.